Hello traders, welcome to another session with me, Wilson from Geldex. Today we'll be looking at the three main capacities needed to achieve a successful trading career. Three main capacities needed to have a successful trading career. I've had a lot of students who come to me, they want me to summarize, all that is needed for them to succeed in trading. And it's a very good one because just like any profession, for instance, if you're an athlete, there are certain capacities that you need to succeed in your career. If you're a banker, there are certain capacities needed to succeed in your banking profession. If you are a doctor, there are certain capacities needed for that. And even if you're a soldier, there are certain capacities needed to succeed as a soldier. So trading is not different. So you need to have certain three key capacities to succeed at it. And the first one I would like to talk about is your intellectual capacity. So when I say intellectual capacity, what I'm actually referring to is the trader's knowledge and skill. It's basically the trader's knowledge and skill. So that can be broken down into two categories. So the first one is this: your understanding of what moves the market and how the market moves. Your understanding of what moves the market and how the market moves. These are two things that you should have understanding on to build your intellectual capacity. So what do I mean by this? Let's say, for instance, I am a hunter and I want to, gain mastery in my hunting, job. All right. What will I do? Let's say I want to hunt, normal, let's say animals, or anything for food. All right. Any animal that can be used for food. What will I do? What I'll do is this: I will understand, the animals or the bush animals out there that I am interested in hunting. So for instance, let's say I want to gain mastery in hunting grasscutter. Okay, what I'll do is this: I'll understand what moves the grasscutter or what attracts the grasscutter in my scenario, okay, or in my case. So for instance, I need to understand what the grasscutter wants or what the grasscutter likes to eat. I need to understand, how to trap the grasscutter. I need to understand what makes the grasscutter, easy to capture. Okay, so I'll study that animal very well through my, seeking knowledge, maybe perhaps from an experienced hunter or maybe wherever I can get knowledge on hunting. Okay, so I'll study that animal very closely. What am I trying to do? I'm trying to find out how to capture that animal or capture that prey. Okay, so me, for instance, finding out what food the grasscutter likes to eat is my advantage in capturing that particular animal. Okay, so that is what drives or what attracts or what moves the grasscutter. Another aspect is what the grasscutter or how the grasscutter moves. Okay, how the grasscutter moves. So for instance, in my studies, okay, I may discover that a grasscutter likes to come out, for instance, in the evenings because perhaps it is nocturnal. It's an animal that you don't usually see in the daytime, but it usually comes out in the evening or in the night. Okay, now that knowledge is also another advantage in capturing the grasscutter. Okay, so at the end of the day, I know what the grasscutter wants or how to attract the grasscutter, and I've also studied how the grasscutter moves. Perhaps in the daytime, that is if it is an animal that likes to come out in the day, or in the night time, that is if it's an animal that likes to come out in the evenings. Okay, so these two knowledge is very advantageous to me, the hunter. Same way when it comes to trading, I need to understand what drives the market I'm currently in. Let's say I want to trade currencies. I need to understand what influences the value of currencies. Okay, what influences the value of currencies? What causes the prices of certain currencies to fluctuate, going up and down? I need to understand it. Okay, so my understanding of what drives or what influences the prices of currency is very, very important in building my intellectual capacity. So once I understand it, then I need to understand how it moves on the chart, because just knowing what influences its prices isn't enough for me. I may understand that, yes, but I may struggle in terms of knowing exactly when to buy it and when to sell it. Okay, so these two examples or these two illustrations can be grouped under fundamental analysis and what? Technical analysis. So fundamental analysis, I understand what drives or what influences the value of the currency. And then with technical analysis, I'm able to what? Read the charts and understand market structure as seen on the charts. So I look at, let's say, the trends of structure. As it's going up, it forms a series of higher swing highs and higher swing lows. This is how it moves. And as it comes down, it forms a series of lower swing highs and lower swing lows. All right. So my knowledge in these two aspects is very, very important or advantageous to me. So understanding what drives the market and how the market moves is very, very important. Or what moves the market and how the market moves are two important things that I need to understand in building my intellectual capacity. All right. Now, the next thing is understanding risk management. Traders, I must say this, that as a trader, your main job is to manage risk. If someone tells you otherwise, he might be deceiving you, because your main job is to manage risk. Risk is something that you can never, take out of trading. In fact, in any business, there is risk. Okay, there is risk in everything we do. There is risk in every business that we are involved in. So understanding how to manage risk is a very important skill. It's a very, very important skill. Okay, so I need to understand how to manage risk, and risk can be in various forms. In fact, risk management is a very broad topic, because let's say, for instance, I'm a new trader and I don't have any experience in trading. I'm now starting and I want to now learn how to trade. My knowledge of the market is, let's say, 0. That increases the risk to, at high levels. Okay, because at the end of the day, I don't understand the market. So at the end of the day, that increases my risk. So if I don't understand the market and I quickly make a deposit and then I just pick up my phone and I click buy, sell, whilst I don't know, what I'm doing, there are higher chances of me losing that account. Okay, so when I obtain knowledge in the market, it reduces the risk lower. It brings it down a bit. Okay, then when I understand how to, implement the knowledge that I have acquired, so I now understand the market. Now it's now left with how to implement it or how to use, that knowledge to generate a practical trading activity. Are we okay? Okay, that is how it works. I have some traders, okay, they may have knowledge in economics, okay, they may have theoretical knowledge in economics. Now, their knowledge in economics is just the theoretical aspect of economics, all right? Because the trader might have knowledge in economics, but may not know how to convert that knowledge into practical trade signals. To know that, okay, this knowledge that I have, this is what it means, and this is how I convert that knowledge to buy and sell signals in trading. Okay, so there are two things here. You are having the knowledge and implementing the knowledge. These are two different things. Okay, because someone may know a lot about the market, but may not know how to use that knowledge for trading. Okay, so it's very important. So once I acquire the knowledge, I now know how to use that knowledge for trading. Then the next thing I need is discipline to ensure proper risk management. That is it. Okay, so to build your intellectual capacity, you need to have understanding, the proper understanding of what moves the market and how the market moves. Be it Forex, be it crypto, be it stocks. sometimes it's very funny when traders hop from financial instrument to financial instrument thinking that they can find a safer environment to trade, or an environment where there will be no risk, but they'll end up getting disappointed because the financial market in general, all the instruments under the financial market, be it stocks, be it crypto, be it indices, be it forex, they all have risk. They all have an opportunity to buy and to sell. All right, and therefore you can't run away from risk management when you are trading any of these markets. Okay, so that is that for intellectual capacity. The second capacity you need is your emotional capacity. Your emotional capacity. So when we talk about emotional capacity, what we are actually dealing with, or what you are actually saying is, I'm talking about the trader's emotional discipline. That's basically that. In the trader's mental framework coupled with emotional discipline. You know, trading involves money, okay? And money has a way of what? Invoking our emotions, all right? So for instance, when you, let's say, receive a huge sum of money from a colleague or a friend, okay? There will be so much excitement, all right, from your part, okay? The same way to when you lose money. All right, when you lose money, maybe perhaps to a thief or a scammer, you'll be very depressed. So it means that money has a way of really invoking our emotions. And we human beings, we are emotional entities because we have a soul. All right, we have a soul which, you know, governs our emotional responses. So we have to understand how to manage our emotions very, very well. Okay, so when we talk about emotional capacity, we are looking at the trader's mental framework coupled with his emotional discipline. His mental framework coupled with emotional discipline. Why? Because when we look at the mental framework, the mental state or the mental framework of a person, all right, and we look at the emotional responses, there is a direct connection between the two. For instance, let's say a trader has aspirations of being successful in trading. Then let's say he makes his first deposit. He deposits $1,000 into his Geldex Capital account. There will be some kind of, you know, emotional response that seems to suggest he's very excited. So he becomes so happy. He hasn't made money yet. Okay, he hasn't made money yet, but he's so happy to make his first deposit. All right, then let's say 3 months down the line, he makes some gains. He deposited 1,000, then he makes, let's say, $500 on the 1,000, making a net sum of 1,500. And then, so he makes that amount in 3 months. Then let's say in the 4th month, he loses the profit of $500, and now he's back to 1,000. He'll be very, very unhappy. Okay, he'll be very, very unhappy. Why is this the case? Okay, this is someone who deposited 1,000, was so excited, but 4 months down the line, he's back to 1,000 and he's not happy. Same deposit amount or same account balance, but different emotional state. Are you okay? So you can see that how trading is. So if you don't have the mental muscles to handle this kind of situation, that is when you feel disappointed. That is when you start having, you know, doubts about yourself, become bitter, and then you end up, you know, taking irrational decisions, and then you might even end up losing the account entirely. Okay, so this is very important. So one key trait, all right, that every trader, all right, should master to build emotional capacity in trading is to master the skill of patience. Is to master the skill of patience. A lot of people lose money not because they don't know how to analyze, not because they don't understand how the market works or what drives it or how it moves, but just because they are impatient. That impatience causes them to take trades prematurely, so meaning they know what to see before they pull the trigger, but they pull the trigger even before it happens, all in the name of the fear of missing out. So they're afraid they might miss the opportunity and therefore they enter prematurely. Now, when that happens, because that kind of activity is not captured in his trading plan, it will affect his edge, or it will affect his performance in the long run. If he keeps doing that, he will lose money, not because his strategy is bad, but because he executed the strategy poorly. Are we okay? So it is important to understand this, that in trading, what you'll be doing most of the time is waiting. Okay? So trading is 10% buying, 10% selling, and 80% waiting. So it means in this job, the skill of patience is a very important skill. You just knowing how to analyze is not enough. You also need to know how to wait. You need to know when not to trade, not just when to trade. You may have certain conditions, as in what to see before you enter, or before you buy, or before you sell. Yes, but you also need to have conditions to say, okay, based on these ABC conditions, I am not trading. Knowing when not to trade is also important, okay, because patience is a very, very important skill in trading. So you need to take note of that. And you also need to take note fear, of course, and also greed. Greed is something that is affecting a lot of traders. So it's a mixture of the three: patience, fear, and greed. These three, emotional challenges leads to, accounts being blown a lot amongst retail traders. So it's very important to note this. Okay, so these are some of the things you need to ensure in building emotional capacity for a successful trading career. And the last thing I would like to talk about is your financial capacity. Just like any business, you can't venture into trading without money. I always say that when your account balance is zero, when you click buy or sell, it won't work. You can't buy or sell with a zero balance. Having the right amount of money to trade is also a very important thing. Now we are in the era of prop firms. Okay, gone are the days whereby you have to solicit funds from family and friends to make a deposit into your personal account before you trade. All right, now we are in the era where there is the option of leveraging on prop firms to finance your personal account. And our advice, every trader out there to, take advantage of this opportunity to finance his personal account. I always say that prop firms are good, but it is best to have your own account, your personal trading account. For instance, if I have $10 million in my Geldex Capital account, it's different from managing a $10 million prop account. There is a vast difference. Funding is very important. I would like to advise that you find the right sources of funding to finance your personal trading account. And I also like to add that as a beginner, don't be hasty in this trade business. Never be hasty. If you are hasty, then it means you have an issue with patience. Remember, this market doesn't reward ambition. It doesn't care whether you want to make $1 million every day. It doesn't care whether you want to make $1 trillion every month. This market rewards skill, which is what? Implemented with discipline. This market rewards skill implemented with discipline. It doesn't reward selfish ambitions, okay, or personal ambitions, or your aspirations to buy a house next year. The market doesn't care. What the market seeks to do is to reward any trader who is well skilled and disciplined enough to implement his skill. That is what the market is looking for to reward. So if you are a trader with this quality, then you will be smiling most of the time. All right. So don't be so obsessed with the money at your early stages or your early periods when starting. Just be obsessed with the skill. Be obsessed with the skill. When you deposit small, it's a good start. Remember, it is not the amount you see now that matters, but it's the future. All right, it's the future. When your skill is up here and your account balance is below here, all right, what will happen is your account balance will grow and match up with your skill. But when your account balance is up here and your skill is below here, your account balance will drop and match up with your skill. So every trader out there, I'd like to advise that focus on skill first, and then the money will follow you as a consequence. This is Wilson from Geldex. Enjoy your day.